Today, I'm going to teach you my exact supply and demand entry rules. This is definitely going to help you, especially if you are a supply and demand trader. So let's go ahead and get into this video. So here is gold. I love to trade gold, and gold is probably one of my favorite pairs that I definitely like to trade for the simple fact of how it moves. Okay, if you guys have been trading gold, gold has been on the move, especially if you are trading supply and demand. Okay, so I'm going to give you my exact trading entries and rules based on my trading system when it comes to trading supply and demand. Now, I know people had a lot of questions in the past, not knowing if they should enter on certain points, and they get very confused. But don't worry, because I'm here to make it very clear to you on how it works, okay? So the first thing you need to do is you need to understand that the trend is your friend. You need to find, first off, what is the trend? Because if you two are to go against the trend, then a lot of times the strategy is not going to work for you, okay? So make sure that you're trading with the trend when it comes to your strategy. If you do decide to use a counter trend rule, just know that you probably 50% are likely to lose that trade because you are going against the trend. So let's go ahead and see how we define the trend. Now, simply on a 5-minute time frame, you can see right here that the market is trending up, okay? Especially if you are a scalper, you know that we trade on the lower time frames. If you are a swing trader, you can also use the 5-minute, but I recommend you to go on the higher time frames if you're looking for a higher analysis. But it doesn't matter if you're a scalper or a swing trader. If you are looking to just simply look for the trend, just note that we are looking for a directional bias, okay? And right now, the bias is what? It's up. Now, I use a thing called the 200 EMA, okay? And the 200 EMA, what it does is it shows you exactly what the trend is, okay? Now, if you guys do not know, if it's above the 200 EMA, I'm considering it to be buys. If it's below the 200 EMA, I'm considering this to be sales, okay? Right now, it's clearly above the 200 EMA, but you do not need to use the EMA. I'm just using the 200 EMA as extra confluence, okay? So you can use it for extra confluence if you want to, okay? So now that I see that it's in buys, let me give you a clear example, and we're going to back this up. So let's go ahead and back this up right here. Now, even though you can clearly see that the market is buying, there's some times where the market might come to a resistance area and start playing off that area. Usually when it's playing off this area, it's more than likely either doing one or two things. It's looking to sell, or it's just waiting for more momentum, more volatility to come into the market to push in a certain direction. But knowing that we are on our first leg of a rule, which is finding the trend and its buys, even though we need to be very not married to the trade, or not married to the setup, or not married to the trend, we do need to be looking to change our mind if the market does switch up on us. But since we're on buys, all we're doing is we're looking for structure to be broken. Okay, so what structure do we want to be broken? We want to any of these structures to be broken, whether it's here or whether it's here. Okay, it's up to you. For me, I would consider this area to be broken, and I want the market to come back to a level of a gap to retest a demand zone. So let's go ahead and play. So we can obviously see that the market was breaking up. So some people question, do you need this full body candle to close bullish? Absolutely, it'd be better. But just because it didn't doesn't mean that the market won't go up. Anytime it's just broken, it's still considered broken. So this is still considered a breaker structure. So where is our demand zone? It is clearly right here. Okay. And what we want is we want a retest down to that particular demand zone, right? And we can, let's back it up. I'm sorry, I moved a little bit too fast. So once we get the retest off this demand zone, you can obviously see that the market is rejecting. So rule number 2 is we want a rejection off of our zone. If the zone is passed, correct? If it continues downward and it passes this zone, that means I'm considering the zone to be what? Invalid. And we are looking for a new setup. We are no longer looking at this old setup, okay? So let's continue. What is the next thing I'm looking for now? Because we are in a rejection zone and we now got the confirmation of rejection that buyers possibly coming in the market. Now we are looking for the break of the high of this candle. Okay. Now, if it does not break the high of this candle, if the next candle does that forms does not break the high of this candle, then we just keep going until it breaks the previous highs candle. And I'm gonna give you an example of that. So if this one is not broken and the new candle forms and it doesn't break this high, then we wait for that new candle to form and to break that high, the previous high of the candle. Okay, don't get too confused. Don't worry about that. This is not as important as this strategy that I'm teaching you right now. Okay, so you see that the market came and it broke the high of this candle. So what do? We enter there. Okay, enter here. If you are a swing trader, I recommend you to put your stop loss right underneath this zone. If you're a scalper, okay, and you're looking to just, hey, I just want to risk as low as possible, I recommend you to have it at the previous low of this candle. But for this video's sake, I'd rather put my stop loss underneath here. And here's the reason why. The reason why I'm doing that, guys, is because I want to make sure that my stop loss is at the most safest place as possible. You do not want to put your stop loss where all these candles have or price have previously been, because it's easy for it to come down and retest it. Now, as a scalper, if you're risking less to make more, that's understandable. It's the same thing with swing trader. You're risking less to make more, but at least as a swing trader, you're actually holding your trades. So the market is definitely going to give you way more profits than if you was to lose. It doesn't really matter anyways, because those wins are going to cover up your losses. Okay, so I'll put my stop loss on here. For a scalping opportunity, I'll be looking for if I was to put my stop loss right here, for scalping opportunity, my take profit will be here at these highs. So let's go ahead and play. Boom. Your take profit automatically hits. Okay. Now, rule number 3. If you are in a twin position, close out one of your positions and leave a runner and place this trade at break even. I've noticed that many traders like to keep multiple positions open, and then they're like, oh, I'm just gonna hold everything, and they don't close out partials, and then all of a sudden the market comes back, either stops them out and hit them out break even. They get discouraged and they get mad. Okay, this is the reason why you want to secure profits. Okay, now if you're a swing trader, you don't necessarily have to do that, because remember, as a swing trader, you are necessarily holding for the long haul. Okay, so swing traders, we're putting our stop losses down here and we're holding this sucker as long as possible. Let's just say for 200 or 100 pips, for example. Okay, let's put at 75. So this will be a 200 pip move. All right, you can obviously see that the market came and hit your take profit really quick. Now, if you wanted to, you could have held it all the way up here. Now, rule number 4, I'm giving you my rules of supply and demand. Whether it's scalping or swing trader, it doesn't matter. If the market shifts really quick like this, I recommend you to close out at least either half or all of your profits. And the reason why is because sometimes gold will go so high, and then especially at the end of the week, it will retrace very hard right back down to the area it just broke out from. Doesn't mean that it won't continue upwards. It just means it may be coming back to grab liquidity, or there's a major pullback that is happening due to high volume of buyers taking profit. That's just how the market is. So this is a video that's going to help you Know how to keep within your rules. Okay. Now, as far as the trading system goes, I do have particular rules on my risk management. Okay. Never, ever, ever risk more than you're willing to lose. Okay. Do not ever do that, because when you are risking $200 to make $100 and then all of a sudden you have a bad month, what ends up happening to most traders is they either blow their account or they get discouraged because they cannot get ahead of the game. They cannot become profitable again because they lost too much money. I recommend you to use proper risk management and to lose less and win more. So when it comes time for a raining day, you know when you start winning again that your wins will always outweigh your losses. And this is what I call the compound effect, okay? The next rule that I really want to get into is, please, for the love of God, be disciplined. Stop over trading, stop over leveraging, stop revenge trading. If you know the market is not working out for you, stop fishing for every single setup to get a win. A lot of times I see traders who are trading supply and demand, and they get into this funk of wanting to win all the time. And then the market doesn't look well. And then they take about 3 or 4 trades and they're constantly losing. Okay. This is going to put you in a setback of discouragement. And you're going to get to a point to where you're not going to want to trade this strategy. You're going to blame the strategy. You're going to blame your mentor. When in reality, you need to blame yourself. So you need to be disciplined. Do not overtrade. Do not over leverage. Do not over risk. And please be disciplined. You must have a trading plan. I say this in all my videos. Please have a trading plan. At the same time, do not feel discouraged when you lose. You're going to lose in this game, okay? And lastly, please trade less, okay? If you know that the market is not going in your direction, you know that you just won twice in a day, trade less. Enjoy the profits, because it comes in a time where we get too attached to the markets. We feel like we have to trade every day, and then we give back the profits that we just earned that very week, okay? Hopefully this video was helpful for you. Make sure you subscribe to this video. Also, I do have a full breakdown of my strategy bundled up in one video course. If you're interested in that, the link is in my description. I really want to help traders become profitable. Whether you have a large account or you have a small account, or you're looking for a strategy, I have multiple strategies that I use to help you become profitable as a trader as you are venturing on your journey. I hope this video was helpful, and I'll see you guys in the next video. Peace.